Welcome back to Investing Talk Podcast.
Today's going to be a fun one. We are finally taking a look at a company that is right in the eye of the storm, or perhaps, more accurately, right in the eye of the battery revolution.
Okay.
We are talking about Lithium Argentina.
Lithium Argentina. I have to say, purely from a branding perspective, it sort of does what it says on the tin, doesn't it?
It really does.
No cryptic acronyms, no Greek mythology references, just the metal in the place.
But don't let that simple name fool you. There is a massive amount of nuance hiding in here.
Yeah.
We are looking at a pure play producer located smack dab in the middle of the famous lithium triangle.
Right.
And this isn't just another mining story about some guys with a shovel and a dream. This is a transition story. We are watching a company move from that speculative developer phase into the actual producer phase.
Which, let's be honest, is usually the hardest leap to make in this industry. That is the valley of death for junior miners.
Exactly. Most don't make it across. But these guys seem to be crossing the bridge, all while these massive macro tailwinds, EV demand, global energy security, are swirling around them.
Right. The transition from we promise we have lithium to here's a lithium, please pay us. That is usually where the rubber meets the road.
Or where the wheels fall off entirely. But with all the buzz around supply chains right now, it is a fascinating time to unpack their specific position.
As usual, before we start, subscribe, like, and comment to this video to support the show. We really appreciate it, and it helps us keep digging into these tickers for you.
So let's get right into the fundamentals. The headline here, and really the reason we are talking about them today, is that Lithium Argentina is no longer just a concept on a PowerPoint. As of 2023, they have entered production at their flagship project, Cauchari-Olaroz.
Okay, let's stop there and unpack this. Because in the junior mining world, the word production can mean a lot of different things. Sometimes it means they dug a hole, and sometimes it means they're actually shipping product. Where is the cash? What are the numbers actually telling us?
That is the big question. Now, looking at the filings, we don't have, the specific 2025 revenue figures staring us in the face just yet. But the ramp up at Cauchari-Olaroz implies that revenue is now flowing.
Okay.
And they aren't just digging up dirt, they are processing. This is a critical distinction. They operate on what's called an integrated model.
Integrated model. That sounds a bit like corporate speak. Break that down for me. Did that just mean they don't ship raw ore on a boat?
Exactly. Think about the traditional hard rock model. You blast the rock, you crush it, and you ship this concentrate, which is maybe 6% lithium if you're lucky, on a massive ship, usually to China, to be refined. You're shipping a lot of waste.
Right. Super inefficient.
Lithium Argentina isn't doing that. They extract the brine from the ground, but they also process it into lithium chemicals, specifically lithium carbonate, right there on site.
So they're capturing more of that value chain before it even leaves the gate. They aren't just selling the ingredients, they are selling the baked cake, essentially.
In a manner of speaking, yes, they are selling the refined product that battery makers actually need. They aren't relying on a middleman in another country to do the chemistry for them.
I want to push back on this a little bit, though. We see lithium miners everywhere. Australia has a ton of them. Why should we care about a brine operation in Argentina versus, say, a hard rock miner in Western Australia? What is the actual edge here?
That is the educational moment of the day. It really comes down to the fundamental economics of brine versus hard rock.
Coal wire.
Very, very distinct high-grade saltwater. And generally speaking, brine offers significantly lower production costs.
Lower costs.
Well, think about it. In hard rock, you are literally moving mountains. You're drilling, blasting, trucking, crushing tons of stone. It's incredibly energy intensive.
Okay, it's heavy industry.
With brine, you are pumping salty water from underground into these massive ponds. Then you let the sun and the wind do the heavy lifting through evaporation. It takes longer. Yes, it can take a year or more. But the operational expenditure, the OPEX, is usually much lower.
So lower OPEX, potentially. You're trading speed for margin.
Exactly. And it's not just one asset here. They have Cauchari-Olaroz, which is the flagship, but they also have a second asset, Pastos Grandes, which is in development.
So they're solidifying a real footprint in that region. They aren't a one-trick pony.
They are building a regional hub. That's the goal.
Okay, let's look at the health of the business then. Because building hubs is expensive. I'm looking at the balance sheet. Is this a bloated operation?
Quite the opposite, actually. It is surprisingly lean. When you look at the employee count, we are talking roughly 71 people.
Wait, 71? That's it for a producing mining company?
For a company with a producing asset and another in development, that is incredibly lean. It screams lean operations.
That is shockingly low. I mean, my local grocery store has more than 71 employees.
It speaks to the nature of the brine operation. You don't need an army of truck drivers and mechanics. You need chemical engineers and pump specialists. But it also tells you they aren't carrying a massive payroll.
That is interesting. But lean operations can sometimes be a double-edged sword. Are they efficient or are they under-resourced? Do they have the cash to actually push these projects forward?
They recently secured about $20 million in financing, specifically aimed at project acceleration. So the money is there.
20 million helps, sure, that keeps the lights on. But I'm noting here that free cash flow is still described as nascent.
That is fair. They're just ramping up. You can't expect a cash cow in the first inning.
Right, so the priority here is clearly growth capex. They are taking every dollar and putting it back into the ground.
100%.
So if you are an investor looking for dividends next quarter, you are probably barking up the wrong tree.
Oh, absolutely. This is a reinvestment story through and through. It's about asset growth, not returning capital to shareholders yet.
Okay, so a lean team, production ramp up, focus on growth. That's the fundamental picture. But let's pivot to the charts and see what the market is actually doing. Because the story on the ground and the story on the ticker don't always match up.
It has been a bit of a roller coaster recently.
To put it mildly, I'm looking at the price action in February 2026. There was some serious volatility.
Right.
We saw stocks in this whole sector trade lower on February 5th, but that was right after a period of strength just a couple of days earlier on February 3rd. What on earth happened in that 48-hour window?
That is where the macro story collides with the company story. The spike on February 3rd was largely driven by the announcement of the U.S. Project Vault.
Project Vault. Sounds like a heist film.
It's basically the Avengers for critical minerals. It's a $12 billion plan by the U.S. government to stockpile these things. That announcement sent a jolt through the entire sector.
Okay, so that explains the pop on the 3rd. A $12 billion headline will do that?
Yeah.
But then we have the drop on the 5th. If the government is buying, why is the market selling 2 days later?
It looks like classic psychological consolidation. The headline hits, the short-term traders rush in, drive the price up, and then the reality sets in.
The reality being?
That government capital takes time to deploy. You don't just write a check for $12 billion on a Tuesday. Investors are reacting to policy headlines, not sustained growth. It's a buy the rumor, sell the news dynamic.
The sugar rush wore off. I'm also looking at the volume analysis here. It's mixed.
It is mixed.
Yeah, I'm not seeing a massive specific spike for Lithium Argentina alone. It looks like high trading volume across the entire critical metals sector. More of a sector bet, not a company bet.
That is how I read it, too. It's speculative interest waiting for a direction. The market knows money is coming into the space. That $12 billion has to go somewhere. But they haven't decided which winners to crown yet.
So the market is just skimming the surface. Let's look at how the street is feeling about all this noise. Let's talk sentiment.
This is one of the most puzzling parts of the data.
I see that. The quantitative sentiment score is currently neutral, a flat 0.
A flat 0.
That feels completely disconnected. We just talked about them entering production, a $12 billion sector tailwind. If the story is so good, why is the sentiment flat?
It's the macro versus micro problem. The news cycle is just dominated by the broader sector stories right now. It's all about the $2.3 trillion in global energy transition investment, or green ETFs. The algorithms are focused on the forest, not the individual trees.
So Lithium Argentina is getting lost in the noise of the energy transition mega-narrative.
Exactly. And there's a lack of specific analyst upgrades or fresh price targets for 2025. The market is in wait-and-see mode on the Pastos Grandes expansion.
Why wait?
They want to see if the company can do it again. They did it at Cacho-Rio-Loros. Can they replicate that success? The market is applying a prove-it-again discount.
Fair enough. Do it once, it's luck. Do it twice, it's skill.
Precisely. But, and here's where it gets interesting, if you look internally, the confidence seems much higher than the market sentiment suggests.
Yeah, so?
It's about who is running the show. You have experienced operators like Mariano Chiappori, the COO, steering the ship. These aren't just financial guys trying to pump the stock. These are builders. Their presence signals a lot of confidence in this growth phase.
So the insiders are bullish, the algorithms are neutral, and the traders are confused. Sounds about right for a junior miner.
It's the classic disconnect that creates opportunity.
Okay, I need to pour some cold water on this. That's my job. We've heard the good stuff. Let's look at the risks. Because things can and do go wrong in the lithium triangle.
Oh, absolutely. There are real risks here, and if we don't talk about them, we aren't doing our job.
Let's start with the obvious one, commodity price sensitivity. We saw that sell-off on February 5th. If the price of lithium tanks, it doesn't matter how good their brine is. The stock is going to tank.
That is the reality of being a pure play producer. You are leveraged to the commodity. However, this is where that moat we discussed earlier acts as a defense mechanism.
The low-cost production.
Right. Think about the cost curve. If prices drop, the high-cost hard rock miners are the ones who start losing money first. They are the ones who have to shut down.
While the brine operators are still profitable.
Exactly. A low-cost brine producer can survive those price dips much better. They can keep the lights on while their competitors go bust.
So they're the last ones to turn off the lights in a bear market.
It's a survival trait.
What about development risks? Pastos Grandes is still in development. Mining projects are notorious for delays. Ramp-up risks are real.
They are very real. Delays are almost the norm in mining. Whether it's permitting, technical challenges, supply chain issues, getting Pastos Grandes to full production will likely have hurdles.
And the market hates uncertainty.
It does. But again, they have successfully brought Cauchari ores into production. They have done it once. That reduces the execution risk compared to a company that's never done it before. They have a playbook.
Fair point. Experience counts. I also want to touch on geopolitics. There are always rumors swirling in South America.
Always. Comes with the territory.
Yeah, I saw some unconfirmed chatter about M&A activity in the Lithium Triangle. Big players looking to consolidate.
Yes, the rumors are always there. And while it is exciting to think about a buyout premium,
we warn against investing based on rumors.
Absolutely. You cannot build a thesis on maybe someone buys them. It has to stand on its own 2 feet. If M&A happens, great. It's a cherry on top.
Stick to the fundamentals, ignore the whispers.
Always good advice.
So let's tally it up. We have a producing asset, a developing asset, a lean team, massive macro tailwinds, but also volatility and execution risk. What is the verdict?
When you weigh it all out, I am awarding a bullish score of 8 out of 10.
An 8 out of 10. That is pretty high given the risks we just discussed.
It is. But here is the elevator pitch thesis. You have a low-cost, pure-play producer sitting in a region that is critical to the global supply chain. The world needs lithium, and the West specifically needs lithium that isn't controlled by China.
That brings us back to Project Volt.
Exactly. The $12 billion U.S. push is a direct counter to China's dominance. Lithium Argentina is perfectly positioned to benefit from this macro rotation.
So you see this as a policy play as much as a resource play?
It's both.
Yeah.
And regarding the timeline, this is not a trade for next week. This is a multi-year hold.
Modifying multi-year.
You are holding this into the full ramp-up of Pastos Grandes. You are waiting for that second engine to fire up.
So patience is key. What should we be watching for in the short term? Any mile markers?
The next big catalyst to watch is the Q1 2026 earnings. Those are expected in mid-May 2026.
Mid-May.
That will give us a concrete look at how the ramp-up is actually translating into cash flow. That is the report card.
So circle mid-May on your calendars. That's the thesis. A low-cost producer in a high-demand sector navigating a volatile market with a massive government backstop forming in the background.
Couldn't have said it better myself.
That's the thesis. If you found value in this breakdown, make sure to subscribe, like, and comment below. We'll see you in the next one.